Good morning, everybody. Welcome on this beautiful July morning. I'm Susan Couch, and I chair the Science, Medical, and Technology Committee. And I'm real excited to be here with my husband, who's going to talk about FinTech or financial technology, which I think you'll find fascinating. To get started, though, I have a couple of housekeeping announcements they've asked me to mention to you. First, if you've not already renewed your HASP membership for 2023, please do so as soon as possible. You may find the online renewal form in this week's HASP Happenings email. If you're unsure of your membership status and want to confirm your renewal or payment, you may email the HASP office at hasp@hope.edu. Second announcement is the August monthly program will be hosted this coming Tuesday, August 2nd at the Jack H. Miller Center for Musical Arts. The presentation is titled Exploring Ottawa County Parks and presented by Jason Shamblin, Director of the Ottawa County Parks and Recreation Commission. The doors open at 9 a.m. with a presentation beginning at 9:30. So join us on your way to or from your voting booth.
All right. Am I okay? Okay. Some people online, hybrid class, all that's good stuff. So my topic this time, and I think this is now my 8th HASP class, is on FinTech or financial technology. And what we're going to talk about today is talk a little bit about FinTech and the history of that business. And we're going to talk about sort of the business side of FinTech, but where we're really going to spend the bulk of our time is talking about FinTech for the consumer, FinTech for the people in this audience and online, because there's a real revolution that's going on right now. And then we're going to talk about adoption, and there's sort of the adoption story in the United States, and there's the adoption story as it relates internationally. And in some ways, the international story is a much bigger story. And so we'll talk about that, and then we'll wrap it up. So financial technology companies are businesses that develop software and hardware for the financial industry. And it's been around for a long time. And there's basically, I put them into 3 categories. One is those companies that create the underlying infrastructure, or so you have a checking account in your bank, and there's software that runs in the bank that they use to manage your checking account or savings account or make loans, do different things, financial functions that a bank requires, a financial institution, a stockbroker, and so forth. So there's those kinds of systems. So there's the underlying infrastructure of this revolution. There's the historical software for serving the business side of the financial institutions we all deal with as consumers. But then what's going on now is all about us as the consumer, bringing financial services to us in a way that's never been done before. And so we're going to talk about that. So the history, and when I was a CIO responsible for buying, spent millions of dollars buying software for a company to stay in business, to pay people, to track their finances, to ship product, to price product, to check things out. There's all kinds of things behind the scenes that are required to make a business operate. And so traditionally, financial technology were focused around banks and financial institutions. And so it was a typical, from my world and career, a typical commercial software and hardware business. They made ATMs. They made they made different software that supported trading stocks and so forth. But we're going to focus on the consumer side. We're going to focus on what's happening now. I'll spend just a little bit of historical piece on the business side, but really about how it affects us. So if you look at the history of what's happened in financial technology, to support the Federal Reserve System, there was a thing called the FedWire that existed up until about 1970, and then a more modern tool came into being. Diners Club introduced the first credit card in 1950. American Express introduced their card in 1958. This seems a little loud. I don't know if we might be able to, can we turn the mic down just a little bit? And so then from the stock market standpoint, the Quotron system was the original system that came out that allowed people who traded stocks to communicate and understand what the prices were and so forth. I think that's better. Is that okay for everybody in the room? Okay. I just feel like I'm coming on a little strong. Anyhow, so that was a major milestone in 1960. Telegraph started in the 1800s. That was replaced by telex. And if you've been around long enough, there were teletypes that would type out characters, and that replaced telegraph. So that was back in the 60s. The first ATM was created in 1967, and how you interacted with it was pretty interesting. You had a piece of paper and you wrote little things and crossed out boxes and it was very interesting. In 1971, so there's always there used to be the American Stock Exchange and the New York Stock Exchange, and NASDAQ came into being, and that was an electronic trading. There was no trading floor, but it was all done electronically. Then it started getting more interesting. E-trade, online banking, those came into existence in the early 80s. PayPal is a very interesting story. I'm not going to go into it. I mean, some other time if you want to talk about it. Actually, I've made the comment, if anybody is interested, there's a whole talk we could do on payments and how payments in this country and internationally work, credit card systems, how money moves, all that stuff. But anyhow, PayPal came into existence, and they were trying to create a method where you can make online payments. eBay bought them, and there was a point in time when, I don't know, maybe 70% of the eBay transactions were done on PayPal. And so they eventually sold them, and PayPal expanded. And so now many online, if you go to Amazon, different places and so forth, PayPal is a very common methodology. Everybody talks about Tesla and Elon Musk. Elon Musk was one of the original players. He got in a little later. He had a different company. There were several acquisitions that occurred in the early PayPal years, but that's where he got a lot of his money. So then cryptocurrency, and there was recently a class on cryptocurrency. I'm going to talk very high level about cryptocurrency later in the talk, but that started in 2009 with the original paper that was written about how blockchain works and a currency and so forth. Apple Pay or Google Pay, you may use one or the other of those, and there's some others. They came into being in 2011. And I was in my job supporting this payment system, and we had to adapt and be ready to do that. And we were ready the day it was introduced. We didn't get any publicity, so we weren't a big house, but you could come up to our stores and use Apple Pay to pay for your products. Then in 2015, FinTech apps like Stripe, Venmo, they became popular. That's sort of when this thing that I'm going to talk about really started to take hold. And in 2017, in China, they implemented what's called Smile to Pay. So if you have an iPhone and you use facial recognition to unlock it, it's using the same technology that in China, if you've registered with Alibaba, which is sort of the Amazon of China. If you go to a shopping retailer and they have the equipment, you just look at the screen and it recognizes you and makes the payment. You don't present a card, you don't present a phone, it's Smile to Pay. And so then in 2019, we're going to talk a little bit about this. Digital banks started to occur. What all that means is it's a bank that has no branches. It's a bank that you do all your interaction with that bank on your phone or on a website, a digital-only bank. So we'll talk more about those. So a little bit of history of how things have evolved from a FinTech standpoint. So, but in the last several years, there's been a real acceleration. And what's driving this? Well, banks, and I've always made jokes about this, having been an IT guy, banks' hours have always been based, it's like 9 to 4, 9 to 3, or something like that. That was based because of the bookkeeping that they had to do, the counting of the money, and the processing systems that they used at the time. Now, all that's been modernized. There's bill counters, their systems are much more advanced, but the interesting thing is their hours haven't changed. And in my opinion, as an IT guy, there's no good reason why that hasn't happened. And so my comment is, in banks, they're focused on security and a lot of very good things, don't get me wrong, but they haven't focused on the customer. They focused on how to manage and control things. And they didn't think differently. Well, that's now changing. So then the other thing that happened is we all got cell phones, and the cell phones continue to get faster. As the silicon chips get faster and so forth, they get a lot more powerful. And so the capabilities, or tablets, all these things are incredible tools that are now available, but they're incredibly pervasive. Next thing that happened is internet access became ubiquitous. You can basically, it's not anywhere on the earth, but say anywhere where we live, you have internet access with your phone. And that internet, that communication ability is huge. We did a class, I can't even remember now, I think it was a year and a half ago, on the cloud and what is the cloud. And the cloud is all about computers in some far off computer room that are directly accessible via the internet to you. So I can, with this phone, interact with an incredibly powerful computer system and communicate to somebody anywhere in the world. And that computer might be in Singapore that I'm communicating with. And it's possible, and it's incredibly fast. And so VC, or venture capital funding, and a lot of other things started to say, hey, we can bring much more powerful financial tools to the population at large. And like I say, the international story is as big as anything. With all this technology, there's a way to change the paradigm so that financial services, all types of financial services, are available anywhere. So all of a sudden the banks, ooh, gee, there's competition out there. And so they've had to wake up. And so they've, as they've started, and you'll see in the talk, when we talk a little bit about banks, they've started offering these services. In fact, some of them, to get there faster, have bought FinTech companies to make them theirs, so that, okay, Citibank or whoever it is comes out with the service, and we got there really quick because we went and bought somebody. But you also see them reducing their nuisance fees, overdraft fees, other fees that they used to impose. You see them starting to eliminate those, because these FinTech companies don't have those fees. and they have a much lower cost basis, so they can be profitable much easier or much quicker. And so they don't have to rely on those fees. And so banks are now responding. Another thing that's recently you start reading about is we'll get you access to your paycheck sooner. So when we would process, well, I won't go into that, but anyhow, just giving you, they're trying to reduce the barriers and the frustrations that have been there for many years. So one of the things that's helped make this happen is something called the Open Banking Initiative. The Open Banking Initiative, in order for these fintech companies to work, if you want to, there's an application you can run on your phone to keep track of your finances. Well, they need to know about what transactions are coming in against your accounts and what credit cards you're using. So the Open Banking Initiative was a practice that allows third-party companies to have access to financial institutions' information. So that if you went to one of these fintech companies that built one of these applications, you give them your bank's routing number and your account number and your password and ID, and they can get and pull your information and provide a consolidated view that the bank never did. And so obviously doing that in a secure fashion that's robust and so forth, that's a big deal. And we'll talk a little bit more about that. But anyhow, the Open Banking Initiative, and we'll see how this is going across the world, that Open Banking Initiative is allowing these companies to have access to your financial information. And so whether it's your stockbroker or, if you have an insurance policy or whatever, these various companies are implementing. The way they do this is something in the software world called an API, or Application Programming Interface. All that means is it's a door. It's a door that you can open and come in and pass data back and forth between two computer systems. Okay, that's all an API is, fancy word. And so by putting these doors in these various financial systems and having appropriate security, I can now develop a piece of software that runs on a phone and go connect into all the different, you to give me all your accounts and all your information, and I can pull and provide a consolidated view of your financial life. Okay, so this whole API and open banking applies to commercial banks, investment banks, insurance companies, brokerage firms, et cetera, the whole crowd. So then what happened is, as seeing this is one company we're going to talk about that said, gee, providing these APIs, that's a lot of software work, a lot of development. So there's a company, one in particular called Plaid, who their whole basis of existence was to develop APIs in a secure way. And then Citibank, Fifth Third, Macatawa Bank, Raymond James, any of these companies could hire and install their software, and they would manage that doorway, that API into their systems. That would they'd provide the security and so forth. And I don't know how they financially do it, whether it's they get a few cents for every transaction or whatever, but there's companies that focused on building these APIs so that every bank didn't have to go do the same work. If they had one standard, and then all the fintech companies, they know if I'm going to bank so-and-so and they've got the Plaid interface, man, I'm good. I know how to do that. Okay. So these API companies have really facilitated this revolution to allow fintech companies to go in and pull data together and provide a composite view. So and here's the worldwide perspective of the Open Banking Initiative. Now, I'm not going to go into all the details, but open banking has occurred in two different ways. One, it's been regulated. And so the regulating governments of particular countries have forced it to happen. That's the dark blue. And market driven has been, oh, if I want to be effective and I want to be competitive in this country, I need to do this. Nobody has to tell me to do this. I'm going to do it. And so that's the light blue. Doesn't mean that they didn't come in. I think in the case of the USA, there was an executive order in 2021 about the Open Banking Initiative. But it was already, in some ways, that was for the laggards, because most of the significant banks had already, or institutions had already made those moves in preparation because they saw that's where the market was going. Okay, so that's how open banking and APIs, that's how they were very key in making all this happen. So where do these FinTech companies play? So we'll start left to right. So payments, processing, doing payments processing and so forth. We talked about PayPal and doing tracking software around payments. Banking, doing digital, either creating a digital bank or making my bank be present from a website basis or an app. Alternative lending. So there are companies that and we're going to talk about them, that you can install the app, give them some information, and they'll loan you money. You don't have to go through some great approval process, and how much you can borrow varies and so forth. But new companies that are all based around this technology. Wealth management, so tracking your finances. I run a little app on my phone that I pull all my investments together, and I can see what's going on in the market every day, and see what's going on. And some of those are very sophisticated, and we're going to talk about some of those. Or some that take all your accounts, provide a composite view, make recommendations, do a variety of different things. Insurance. You can apply for insurance, life insurance, real estate insurance, homeowners insurance, again, from a FinTech company. And they may just facilitate finding a good insurance policy for you based on your description of your needs, or they may provide the lending itself. Capital markets, this is kind of more behind the scenes of trading investment vehicles, buying and selling, and so forth. We're not going to talk so much about that, but that's it's sort of the FinTech to support the financial companies behind the scenes. Small businesses, a whole set, and you'll see them as we go through some of these different areas, companies that are focused around supporting businesses, whether it's loans or other things, we'll see. So there's a focus around small business. And then finally, real estate, taking the mystery out of buying and selling property. And so there's a whole group that are focused in that area. So these are kind of the areas that we're going to talk about that are the major FinTech focuses. And this, I just threw this in here. Where is a lot of the software and tools coming from? Well, you see San Francisco, New York, London, Beijing are four of the major locations, but you can see other places, Denver, Colorado in our country, Shanghai and China. Anyhow, you can see the tools are coming from all around the world. This slide is very important, and what I want you, and it's to give everybody in here perspective. We all live in a particularly well-developed country with a lot of financial capabilities. Now we're all in kind of the same age group, so we all have kind of a common experience and perspective on financial institutions and banks and how you think about those things. The younger population, they're really comfortable using a phone, using a tablet. Where it may not be a common thing for us, for younger folks, they're very comfortable doing business that way. But what I want you to think about is the unbanked population in the world. So in this map, we're going to come back to this map in a few minutes. When I say an unbanked person, I mean a person that doesn't have a bank account, doesn't have a checking account, doesn't have a financial relationship with the company. Their life is all based on cash. And so the thing to note here is in the US, the unbanked is about 8% of the population. But you go to South America and it's about 65% of the population. You go to Africa, it's about 80% of the population. In Australia, it's I don't know the precise number, but it's in that 26 to 50% range. So we're all accustomed to this very sophisticated society with very sophisticated financial systems, but there's an enormous population. The bulk of the world doesn't have that access. And you'll see when we talk about the adoption of this technology, how dramatic it is in those other parts of the world. It's not that it isn't dramatic here, it's significant, but it's really dramatic in other parts of the world. So we'll come back to that. So in a lot of this class, I'm going to go through and I have, I'm going to put up tables of names of companies and information about them. So in some ways, this may be very boring for you and I apologize, but what I want to do is highlight some of these companies and what they do. So the top fintech companies in the world in 2021, Ant Financial, which is based in China, they had a valuation of 150 billion. They're an online payments provider. They do a credit rating system. They're a holding company. They do a lot of different things. Stripe in the US, they process online payments. Aiden processes international payments. Paytm in India. India is a fascinating story. They do mobile payments because the bulk of India is not is unbanked. And they've done two things. Both Paytm and a government payment system have been implemented in those countries, and it's taking the country by wildfire. And there's a great story, and I won't be able to convey it properly, but about a beggar in Beijing in a train station. And he's not using Paytm, but he's using a different, the government finance or payment system. And he's got a cell phone, and he's got a piece of paper with a 2D barcode on it. And you come up with that government payment system and you take a picture or shine it on that 2D barcode, and you can donate to him a few rupees. It's changed his life because so many more people now donate money to him that he now can feed himself and so forth. I don't know the rest of the story, but just a simple thing like that has changed his life. Coinbase, they're a cryptocurrency. I'm going to talk a little bit about that. Robinhood, there's been a lot of press about Robinhood, and Robinhood about 2 years ago really made trading stock available to the novice. And of course, there's lots of crazy stories, and I'm not going to spend time on it, but it has brought huge ability for the unsophisticated investor to invest money and make money. Square, now called Block, they've been around a long time. You go down to 8th Street in this town, and you go to those various retailers, and probably half of them are using Square point of sale systems. If you go up and if you go to a retailer and you make a payment, and then they're working on a tablet and they flip the tablet over to you to make a tip, that's a Square system. And so Square focused on payments, and they've become huge and been very successful. Chime, they're a digital bank. They're a bank that they have no branches. They have an office, they have a software. The way you interact with them was on a cell phone or on a website. Klarna is one on Sweden. They provide financial systems for retailers and so forth. We'll come back. The BNPL, that's called Buy Now, Pay Later. We'll talk about that a little later. Green Sky, they provide support to banks for loans and so forth. I'm trying to think if there's anybody else here that's significant. Wise, we're going to talk about the international money transfer. They support 750 different currency pairs. If you go back to that unbanked population, money transfers are a huge deal. You know, there's all this political hoo-ha about immigration, but immigration is important for our country's existence and other countries' existence. I mean, we're all immigrants in this country. But if you're an immigrant, you know, undocumented or otherwise, and you want to send money back home, and of course, if you know that that's a very common thing, or in the opposite direction, money transfers are huge. And so there's several companies now that do international money transfers, all on a phone, all very easy, eating into Western Union's business in a big way. But Wise is one of the biggies. So, and Avant, that's an online lending one anyhow. So if you zero in on the US, Stripe, we've talked about those guys, Kraken, we kind of talked about all these folks, but anyhow, there's a number of them here that are based in the US. So of all these applications, what are the big uses? Well, the number one use is banking. And many of you may use an online bank app or website yourself. And so that's by far the most common. Payments is next. Cryptocurrency has become huge. I'm not a crypto guy, by the way. My nephew did that class and I know how it works, but it's way too crazy for my life. But anyhow, investing, budgeting, credit history, and then down there's some smaller stuff at the end. But that's kind of how it breaks out, and we'll go into them in more detail. So I'm going to talk about apps. And so we're going to talk about these 6 categories, but many applications do lots of different things. And so it's hard to say, I might list an application in one particular category, but it's used for a lot of different things. So they don't all neatly fit into a single category, but we're going to talk about banking, we're going to talk about personal finance, lending, customer payments, insurance, and cryptocurrency. So banking. How this has evolved, and so there's regulations in the banking world and so forth. So online banking are often divisions of traditional banks. They might have started out on their own, but as I mentioned earlier, the bank wants to compete, so they buy them. And so when I go through the list, you'll see that's a lot. But their whole point is to provide, and back from my retail days, frictionless experience. That's the big word if you work with Amazon. How can I eliminate the friction of you doing business with me? And so it's the same concept. How can I make banking easy? How can I make it so that it's not painful for the person to experience? And so, like I say, there's online banks, no branches. But what can banking apps do? So on the typical stuff, they can schedule online payments, bill payments. You can transfer funds between your accounts or accounts from other institutions. You can check balances. You can review your transaction history, what you've been doing. You can view electronic statements. You can set up or cancel alerts. And so if you want to have it alert, like my wife and I have our credit and debit cards send anytime a transaction, it sends a text message to us saying, you just completed this transaction. And of course, so we can buy each other presents when it comes to gift time. She has certain cards and I have certain cards, so I can spend money without her knowing and she can spend money without me. I mean, it's not a problem, but I mean, it's just, you got to think about that stuff, right? And then searching for your nearest bank branch and ATM location. But then there's more sophisticated things they can do. They can analyze your spending and saving patterns and make recommendations to you about how you might improve. And to somebody who's new, who's young, that can be very helpful to help them. We've all had a lot of our life experiences, and so we kind of know that stuff. But a young person starting out maybe doesn't have that perspective. Or somebody who doesn't have credit, they have products to help them build a credit, build knowledge, and build experience and build a credit reputation. And they'll offer lending products to individuals with little or poor credit history. And so it gives that individual an opportunity to maybe get out of a difficult situation or whatever. So anyhow, and then products to help reach their savings goals, do cryptocurrency investing, crowdfunding, a lot of different things. So some of it quite creative. So here are the top online banks, and most of these you probably never heard of. And I may not pronounce them all right either. So Quantonic Bank started in New York, in Queens, and focused on the immigrant community. And it was originally an online bank, didn't have any branches. They now have 2 branches. Axos started as an online bank and now has a few branches. Discover Bank, so we all know about the Discover credit card. They had no physical banking presence. And so they started an online bank. And so they don't have any branches still today, but you can open accounts and do your banking through Discover Bank. NBKC is a National Bank of Kansas City. iGo Banking is an online division of Flushing Bank. They bought somebody. Salem 5 Direct is an online bank that are owned by Salem 5. Again, an acquisition. TIAA Bank is an outgrowth of TIAA, and that's TIAA Cref, and I can't remember its teachers. Anyhow, I apologize, I don't remember the acronym, but very, very huge corporation. But they bought EverBank, and EverBank was an online bank, and so that's their presence. And BioBank is an online division of MidFirst Bank, and BioDirect is a sub-brand of Webster Bank. So those are the top banks. As you can see, many of them are acquisitions and owned by, a traditional bank, but it's an online presence. If you look at the top banking applications that are out there, so Capital One, we've all heard of those guys. Ally Bank, Ally used to be GMAC, the financing arm of General Motors, Bank of America. Those are all traditional banks, but then you've got Varo is an app, and it's a totally online bank, no physical presence. Wells Fargo, very traditional, had some financial challenges and leadership challenges, but traditional bank. Chime, we mentioned them earlier. That's an online bank, has no physical presence. It's just an app. PNC, they're well known, at least around here. Synchrony Bank, they're online. Chase, of course, is huge, based out of New York. And the New Bank and Revolt, those are both banks that those are both online banks that have been very successful. So of the banking applications, you can see about half of them are traditional banks. And so when I say top banking, the ones that are used the most of all the online apps on your phone that are banking related, these are the top 10 or whatever it is that are out there. About half of them are traditional banks and about half of them are totally online banks. So, okay. So now we're going to switch to personal finance and wealth management. This covers a lot of stuff. So budgeting, saving money, paying off debt, doing investing, tracking your expenses, lowering monthly bills, managing financial goals, sending or receiving person-to-person payments, tracking net worth, monitoring your credit scores, finding car insurance, filling tax reforms. All these things are possible functions that the personal finance category of FinTech apps do. And so who are the top ones here? One is Personal Capital. They track wealth and spending. Mint, if anybody has ever had experience with Quicken, Quicken was Quicken was traditionally an application you installed on your PC and to track your finances. My wife and I started using Quicken in 1995. Mint was the online version of that. It's their own company that they started out and said, we can do this, do all this stuff, and we're going to do it purely online. And so Mint has an enormous number of functions. It's a very robust system and very popular. But it's been around for, 10, 15 years, been around for a long time. Spendy is efficient for tracking a family and household, lots of people. Every dollar and you need a budget are zero-based budgeting. Now, zero-based budgeting is an accounting term out of the business world. And so if you're not familiar with it, when you think of budgeting and you think of your, if you think of your expenses and let's say your groceries, and when you think of a budget, you say, oh, well, how much did I spend my groceries last year? And so you come up with some number, as opposed to saying, I need to spend, these are the things I need to buy. And so my grocery spending should be X. Or let's say dining. I could build a budget and say, well, last year I spent this much dining. But maybe what I really ought to say is, okay, for my wife and I, we're going to spend, $50 when we go out, or $100 when we go out, and we can afford to go out once a week or twice a week. And so I do the math and say, okay, I'm going to spend $100 and between the two of us, or not $50 between the two of us, and we're going to go out twice a week. So that's $100 times 52, that's my budget. That's the zero-based method, as opposed to saying, well, historically, here's about what we spent. And so zero-based budgeting is you start from the bottom, you start from zero, and you build up a budget in each category of what you think you need to spend or what you want to spend. That's a classic in the business world. That's a classic way for finance to say, well, it's just not the norm. We want you to think differently. And what do you really need to spend? And so it's a classic from my very good accounting friends. Pocket Guard, that's a very simple budgeting system. Good budget. So many of these things, you set a budget and then it pulls in the data through those APIs we were talking about. And then you can track your actual activity. Good budget is very simple. It allows you to build a budget, but doesn't provide any tracking. Stash started with investing, but it now has budgeting and other capabilities. Honeydew, budgeting with a partner. And that could be for task management too, but we won't get into that. Digit is for passive savings. In other words, I don't want to spend a lot of time on it, but help me kind of figure out how to squirrel some money away. So those are the big applications in this arena. If you get into investing, so then there's Acorns, and they're more like penny stocks, micro investing, and so forth. Binance USA is crypto-based. It's one of the exchanges and very popular. You'll see when we look at crypto, it's a huge volume of business done. Betterment is automated investing. So now here's something you may or may not be accustomed to. So many of us work with a financial advisor. And we all have different strategies of how we invest. It might be conservative, it might be more aggressive, a mix, whatever. And so we rely on an individual. Well, with the advancement of technology, AI and expert machine learning and so forth, Betterment, and let's see, there's Wealthfront down at the bottom. They're automated investing, meaning there's software that's managing your investments based on you give it a bunch of criteria of how much you want to spend and how much you want to invest and your expectations and your willingness to take on risk or not. And it automatically buys and sells stocks for you. And so, and that's become a big thing. Robinhood, we talked about that. That's for the beginning, very active investor. And they've had huge success and caused crazy, there's lots of stories about, which we don't have time to go into, but of sort of the crowd mentality of, okay, let's go after this thing and bid it up and so forth and make a bunch of money and long story. Stash, we talked about that. Tasty Works, I've never been an options person, but if you're into options, that's the way to go. Twine is another one, couples investing together. Hopefully you all get along. Wealthfront, we talked about that. And Webull is active investing and saving for retirement, a focus for putting money away for the future. So those are the top investing applications. So let's talk about lending. So there's home loans, there's startup small business loans, personal loans, student loans, car loans, peer-to-peer lending, lots of different things here. And then there's a new trend that's just kind of catching on in the last, I'll say 6 months, maybe a year. And what this concept is we're all accustomed to credit cards. And so you spend money, and you put it on a charge card and you're charged interest. You may pay things off immediately and just kind of use it as a way to reduce your dependency on cash. But if you put things on a credit card, you pay interest. You pay interest on the balance and so forth. And the interest rates can be quite onersome, can be significant. Let's just put it that way. So there's a new trend, it's called buy now, pay later. And what that is I buy something and I'm going to pay it off in 4 monthly payments, 4 quarterly payments, 4 payments over a week. And I picked 4 various numbers, not big numbers, though, not 10, smaller numbers. And you don't pay any fees. You don't pay any interest. And So then the first thing you ask is, well, how can a company make money doing that? Well, as a retailer, one of the things that you don't see when you use your credit card is the credit card companies charge the retailer. It's called an interchange fee, and it's ugly. They charge the retailer. So if you go and you use an American Express card and you go to a merchant downtown and you spend $100, that merchant's probably going to get $95 out of that. If it's Visa, it's maybe $3 or whatever. I joke about this because of 30 years of running a payment system. In 1991, when we first started taking credit cards in our stores, the rate sheet for interchange was 1 page. When I retired in 2019, it was 25 pages. If it's this kind of credit card that gets miles, we pay for them. The retailer pays for your miles. Okay, you pay. So if you had a credit card that didn't get you miles and you had a credit card that did, I'm going to pay. Let's say you spend $100, and they're easier on grocers because our margins are so low. So in the non-miles case, on the $100, I get 98. When you have a miles card, I get 97. And so that's where your miles are getting paid for. So my point here is, in the buy now, pay later, the money they make is from those interchange fees. That's how they make money. They don't charge you interest. And it's, again, because they don't have this massive infrastructure and all these costs that they pay, they can operate with a much lower cost basis and not charge you as much. So they talk to shoppers about why they do buy now, pay later. One point, avoid paying credit card interest, making purchases that otherwise wouldn't fit in a budget, kind of typical credit card stuff, to borrow money without a credit card, without a credit check, don't like to use credit cards, and so forth. So there's a variety of reasons why this is gaining in some popularity. So typical lending companies, now the thing I thought was interesting here is what these companies are focused on. So Affirm is focused on installment loans at point of sale, buy now, pay later. In other words, the retailer can immediately respond to you and provide that service. Better is to help people become homeowners. Build is to do lending for building contractors. Both Biz2 Credit and Bond Street are small business loan companies. Earnest is focused around students and personal loans. Fundbox, they use advanced analysis to make better credit decisions. In other words, they're not relying on the Experian and TransUnion and the big three. They're looking at data on you and making decisions based on that. Lending home is real estate short-term bridge loans for flippers. So if you've watched on HGTV, Flipper Flop. Yeah, Flipper Flop. Well, they would go to Lending Home and to get money to buy a house, renovate it, and sell it. So it's a short-term loan. And so Lending Home would be a company that could do that. Op Loans is personalize and educate homeowners on loan options. So if you're new to it, helping teach you is what their focus is. Point is for consolidating people that have money to invest, that want to do it through loans and not big capital companies, but sort of group financing. They do that. And same way with Prosper. Stavvy is more sophisticated lending tools. And then Tala is going back to that conversation about the unbanked parts of the world. That's their focus. And these are the top lending applications. Credible, focused. If you attended my class on what companies know about you, Credible is they're not going to sell your data. And so they keep it to themselves. And so if you're concerned about that, they're your place to go. Lending Tree, lots of ads about Lending Tree. They go out and search different loan providers, and based on your requirements, say, here's who we recommend. SoFi, they started, big company. They started focusing on students and their young person's needs, based out of San Francisco. And so, and they've grown pretty, so they're into, first house, first apartment, student loans for education and so forth, and they've grown dramatically, and they've now broadened. Lightstream loans all different types. Upstart, people with limited credit history, they're new to the credit market. Avant does all forms of credit. Upgrade is quick response. I mean, you can get on, install the app, provide some information, and get a loan. I don't know if I'd say minutes, but within hours. Amon, they again are kind of a consolidator, help find different loan providers and help you make that decision. Marcus is an app from Goldman Sachs that's pretty highly rated. And then Earnin is a payday loan advance with no fees or interest. So we all talk about the storefronts, you know, they'll do paycheck loans and real crazy interest rates and so forth. And Earnin doesn't have that. So we'll switch now to payments. So that was a little bit about lending. So payments. These are all the different payment systems that are out there. Amazon, they have a payment process. Apple Pay, if you have an Apple iPhone and an Apple Watch and you link them together, you can just present your phone and pay. Same way with Google. They have Google's Wallet, and Android Pay. So if you have a Google phone or are more prone to use Google services, they have a payment. Facebook, of course, and anybody who knows me, I don't trust Facebook anyhow, but they have a sort of a minimal payments facility, which I would never use, but anyhow. Alibaba, we talked about them. Alibaba is the Amazon of China, and so they have an Alipay wallet. Samsung has one as well, not as prevalent in this country. eBay, that's where, as again, we talked about PayPal, and Venmo. We're going to talk about Venmo in a minute. That's owned by eBay. Actually, it's owned by PayPal. And Tencent is a huge company in China, and they have a whole payment process as well. And so if you look at different payment technologies and who the popular ones are, and I couldn't get real current data. So this is 2018, so it's 4 years old. But credit cards and when I was working, the fascinating thing was to see the drop in the use of checks. I don't have any of those charts with me anymore, but anyhow. So credit card and cash are sort of, you can see number one. Debit cards are pretty high. Checks still in there, but years ago checks were so much higher. PayPal is really high. Apple Pay, Venmo, Zelle, we're going to talk about some of these others. And then on an international basis, of course, China sort of overshadows everything in terms of the numbers. So that's why you see WeChat Pay and Alipay real high compared to the others. I don't know if we have time to go into this, but people have asked me about Apple Pay and is it safe? And so forth. And what I would tell you is these payment systems, particularly Apple Pay, when you register your card to your phone, there's a piece of hardware, a piece of security hardware in your iPhone that the card gets loaded and it gets sent off, and they take that PAN number, which is the 16-digit number on all credit cards, and they convert it to a different number. It's called a DAN, I think. And that number gets put in your phone. And so all interactions for that credit card use that DAN number. That DAN number isn't known by anybody other than one of the computers back in the process. So somebody, a hacker or whatever, they can get a number, but it's totally useless to them because it has so they can't tie it back to your account. And so there's a whole lot of steps, and I don't really have time to go through all this, but there's a whole lot of steps that gone through. It's gotten much more sophisticated. And so the answer is Apple Pay, Google Pay, incredibly reliable. Particularly Apple phone is the best and Apple Pay are the best just because of the nature of how those phones are designed. And so, sorry, I kind of put this in here. Didn't have a lot of time. I put this in here also. We might come back to it. This is a chart I put together a while back talking about all the different forms of payment, but I'm going to run out of time, so I'm going to skip on that. So let's talk about money transfer applications. They're often called peer-to-peer money transfer. And And this is again, and we've done it. I do it with friends. We go out and play golf, and because we're at a friend's club or something or whatever, somebody picks up the tab or we'll go to dinner, and so I owe somebody money. So I fire up one of these transfer applications. So I don't have to write them a check. I don't have cash, let's say. And I just want to transfer money. I want to give you $50 or 27.37 or whatever. These transfer applications are ideal for that. And I use several of them. So it simplifies payments, person to person, entity to entity. It's quick, convenient, cheap, secure. You can link things to your credit card, or your bank account. I use my bank account in this case. And it's huge in terms of international money movement. And yet these companies have to go through huge security work for money to be able to prevent money laundering. And so it's not, it sounds simple. It's not as simple as it appears. So these are the top ones, and I use several of these. So Cash App, that's again, was developed by Square. It used to be called Square Cash. And sometimes you'll go to a retailer and they say, we went to a farmer's market and somebody said, well, I can't take a credit card. And well, can you take Apple Cash, or can you take Cash App? Oh, sure. And so you put in the person's cell phone number and you transfer money and they look at their cell phone, I got it, and you're done. Facebook, again, my usual comment about Facebook. MoneyGram is an international transfer. They support money currencies from about 200 different countries. PayPal has a variety of services. Remitly is another international money transfer. You'll notice there's a lot of these that are the top ones. And again, when we go back and look at the world situation and the unbanked, it becomes very obvious. Venmo, that's another one I use, that's owned by PayPal. And it's easy to transfer money to a friend if you owe something or whatever. Then back on that international transfer, Wise, we talked about earlier, they support about 50 different currencies, regardless of the countries they're used in. World Remit, they do international transfers and they support about 70 different currencies. And then Zelle, you might have used Zelle because your bank supports Zelle. And the reason your bank supports Zelle is your banks all got together and created the Zelle network. And so it was an easy way for them, again, now starting to think about the customer and how to make it easier. Most banks support Zelle. And so we use that and it works well. A little bit about insurance. So companies trying to make insurance easier. So again, just talk about some of the capabilities. Educate users on insurance options. Bright Health is an insurance platform to connect. They go and look at different brokers, different insurance out there, providers out there, and so they are an in-between facilitator. Circular Health, they try and reduce the barriers and make it easier for Medicaid customers. Clear Cover connects car owners with insurance options and better rates, help them search and find one. DOMA is a real estate insurance and loan company. Go Health is streamlined to help make it easier for you to pick a healthcare plan. Kin Insurance is a home insurer that provides insurance to people that live in high-risk regions. So if you're in River Delta or an area that's prone to storms and so forth, they're your company to work with. Lemonade, that's very popular. They simplify the insurance sign-up process for pets, renters, all kinds of insurance. Metro Mile, this is an interesting one. I actually invested in this for a while. They analyze a consumer's driving behavior and based on how many miles you drive in a given period of time, they will insure you with a lower rate based on your lower driving. Now, a lot of the other I got out of this investment, by the way, because all the other insurance companies woke up and said, gee, we ought to do that too. One Concern protects customers from natural disasters by helping predict and helping them understand and prepare. Polygenius is a comparison tool, and then Theos Life, it helps families enroll in helps advise them on appropriate life insurance plans. these are companies, I'm going to spend a lot of time here, but these are other fintech companies that provide services to the insurance companies. So providing technology services to facilitate insurance companies' operations. And these are the top insurance applications. Lemonade, we've talked about. Insurify is one that helps compare. Metromile, we talked about that one. Root is an auto insurance based on how you drive. And again, the other companies have gotten into this. They plug it. And so the network that exists in your car that all the computers are talking, you plug a module in there and it collects data. And based on that, then they will give you, in theory, if you drive well, a better rate. Oscar Health, they go through an interview process, and based on that interview process, help recommend life and health insurance that makes the most sense. Ladders, like online. So I'm going to do real quick on cryptocurrency. This my nephew did a talk here a while back, and it was pretty intense. Sorry about that, but it was also, if you know anything about it, it was pretty good. But anyhow, it might have been a little frightening for folks. Cryptocurrency is any form of currency that exists only in the digital form. In other words, there's no paper money, and it's typically not backed by a government. It has a distributed registry, so there's no central issuing or regulatory authority. It's decentralized, so they use a lot of computers to all record the transactions. You can see all the transactions on all the different computer systems, and it's designed in a way that it can't be counterfeited and so forth. And it uses this technology called blockchain. That can be a class on itself. There was a HASP class on this, so I'm not going to get into a lot of details, but these are the cryptocurrencies, the major cryptocurrencies that exist. Bitcoin is the largest. It was built in 2009. Ethereum is next, and you can go down the list. There's stable coins. Stable coins are tied to a currency. So in theory, if you have the US dollar coin, USDC, that coin is always matched to whatever the value of a dollar is. And so in essence, when you do all this trading, you move things into a stable coin when you want to get the risk out of the picture. And all this stuff is coins that provide value to people. And so if people don't believe in it, and if they don't assess value to it, it's not going to have any value. But the more people who get convinced, oh, this has value, and they start, I mean, it's just like currency. If any currency that exists, if it's not backed up by something, or it doesn't have something that gives you trust and belief that it's good, it doesn't. I mean, some currencies in this world, inflation's crazy and they're worthless. And so in the US has, of course, historically been the strongest. The US dollar has been the strongest because of how it's backed and how our financial system is run. So these things are just different currencies that are designed to be distributed, and they have grown in value, and you can make enormous amounts of money. So anyhow, I'm not going to, it's a big topic, but these are exchanges. These are companies that it's like a stock exchange. So here's where I can go to buy and sell cryptocurrencies. And you can see Binance, they trade, and there's thousands of these currencies, and lots of reasons why they exist. But on Binance, there's 394 different coins you can trade in, and they get 20 million, almost 21 million visits a week. That is a very active exchange. Coinbase is number 2. You can trade 208 different coins there, and so the coins, some of these exchanges, many of those coins are all the same across those concerns. It's just a different place where you can exchange the value of those coins. So anyhow, they're out there. And my wife and we had a nephew who got married. And so we were out in Oklahoma City, and we're going through the Oklahoma City airport. And lo and behold, there is a Bitcoin ATM. So you can deposit dollars, and you can see on the right-hand screen, you can buy Ethereum, Bitcoin. I can't remember what the last one is, but anyhow, we didn't use it. I had to take pictures of it because I just thought, oh, they really, I'd read about it and so forth, and they do exist. All right, so let's talk about adoption to wrap this up. So again, we're going to talk about the unbanked population, and we're going to talk about the adoption rate by country and in the US. So I go back to that same map. So like I say, Latin America, 65% of the folks. Now this data is, I think, 2018. So it's a little dated, but it represents the opportunity for these different types of apps, because the one thing that exists in these countries is cell phones. And so it gives everybody a vehicle to participate. So 65% of the folks in Latin America don't have bank accounts. 80% in sub-Saharan Africa. You can see the US and Western Europe are in the 8% range. Those are the only areas of the world that are that low in terms of the number of people that don't have bank accounts. It's 8% in our society. It's 8% in Western Europe. Every other part of the world is higher. So East Asia is 59%. Southeast Asia is 58%. Let's see, the Middle East, 67%. Those are huge numbers. Think of those percentages of the population. Those people don't have bank accounts. They're living their lives based on trading and a cash operation. So all these high-tech applications, these FinTech applications put on a cell phone, look at the marketplace. And you'll see with the adoption rate what a huge impact this has. So what are the FinTech adoptions by category? Going back to the first comment, money transfers, 75%. Money transfers. I am a basket weaver in Africa and I want to sell my baskets. Well, you can transfer. I can now have a money transfer application. You can transfer money to me. I can even have the semblance of a bank account. And I can now conduct business with other than paper dollars or, whatever the currency is of that nation. And so and then the whole immigration story. We've all heard the stories, whether it's immigration in this country, in Europe, Syria, all the different things that have gone on around the world. And those people need to move money. Insurance is next. This is worldwide. This is not US, this is worldwide. 34% savings and investment. 29% finance planning, and 27% borrowing. But the number one thing is transfers. So here's the US FinTech adoption. So payments, payments is about 100% awareness of, I've heard about Apple Pay, I've heard about Google Pay, all these different things, PayPal, et cetera. About 86% of the population uses them. Budgeting apps, there's about a 94, this was data from August 2021. 94% were familiar with them, about 43% use them. Loans, 81% are aware, 27% use. Investments, 82%, only about 18% use them. And cryptocurrency, it's all been on the news, so at least 50% of the population is aware of it, but only 10% uses it. That's not a surprise. My nephew has been incredibly lucky. What are Americans using? At least 55% of the people have used an online bank app, whether it's you've gone to a website or you've used the online cell phone app. 40% has used at least peer-to-peer payments of one type. 17% have used a standalone budgeting app, and about 17% have used investing apps. Now, again, I can't remember when the date on this one is, but this is probably 2 or 3 years. I couldn't find a lot of current data. Most of it was a few years old. Again, here's another way to look at it, the adoption rate. The adoption rate across the world. So you look in US and Canada, it's 48%, 46%, 50%. But you go to South America and it's 75%, Mexico, 72%, China, 87%, India, 87%. Because again, these folks didn't have anything. We have had things, and so the rate is slower. I found this one just yesterday. So this is from 2020. So this is by country. So 87% adoption rate in China, 87 in India, 82 in Russia, South America, 82, Colombia, 76 on down. Even the UK, 71%. We're not even on this chart. No, because we're at 33%. And you'll see that in this chart. So again, if you look down in the middle, somewhere in the middle, right below Hong Kong, we're sitting there at 33% that we've adopted these tools. But look at China, look at India, look at other countries, and you can see how it's been a huge adoption of these tools because of what they didn't have. So that's the story. It's a very quickly evolving technology. It's dramatically increased the availability of services, made it significantly easier to do things, but it's brought availability of financial services to all levels of the spectrum worldwide. And so it's really had a dramatic effect. So that's my story. I'm sticking to it. And
any questions here from the room? Yeah, get over there.
You enlightened me about my bank that suddenly said they could pay me, make my payments early, which they've done.
oh, there you go.
Nice presentation. Just to comment, one of my neighbors was in Europe maybe 3 weeks ago, was pickpocketed, lost virtually all of his stuff, but he still had his phone and he spent the next 2 weeks just using Apple Pay.
He did.
And it worked
Yep.
fine for him.
It
It's
does.
amazing.
It's a very cool technology. I mean, I can understand people's concern about it, but it works really well. Yes.
Okay, I do have online banking, so but that took me a long time to get to doing, but I love that.
That's
All
okay.
I do love that. I still write some checks though.
I do. We
Right.
do too.
I have a
Not many.
niece. I have a niece who uses Venmo, and
Yes.
we're a family that, you know, so and so is getting this for the party. Somebody else is doing that.
Yes.
Send me $20-something, so on. So I'm thinking I should do something with Venmo, but does that mean it goes from my credit card to her credit card?
So
I'm
when
not
you
sure
set
I have
up
an account.
when you set up Venmo, all these apps, and
Uh-huh.
Venmo's one of them. When you set up these apps, you can tie it to your bank account if you like,
Oh,
or you can tie it to your credit card. So, and what I've done in that, because I use Cash App, Venmo. Yeah, but Zelle's in the bank. Anyhow, those are the two I use the most. And in both cases, I've tied it directly to the bank account because I don't want to go on the credit card and I don't want to incur interest and it's an extra step that's unnecessary. And so because I'm confident of the security of the way these things have designed, I'm very confident giving the routing number and the account number and let it go directly to my account, or our account, I should say.
I have one more comment when we talked about ATMs and how exciting they were when they were new.
Yes.
And it was 1973 and I was in Florida. I was a newlywed. We went to the First National Bank, in West Palm Beach, Florida. And the machine that they had there was only outside. You know, I thought, wow,
Yeah.
it was great. They named it Tilly.
Oh.
Tilly.
Yeah, I think oh, go ahead.
No, finish it.
No, go ahead, Kay.
Well, first of all, I could understand you this morning. That was great.
I try.
You did. What is there about, I know you keep saying that it's safe, but what is there about it that makes it secure and something the dark web can't get into?
Yes. I got to be careful because this could be a long answer. What I would tell you is, and I talked about this in a talk I gave last November about hackers. A lot of the financial institutions and so forth, we were all quite naive. When I used to say that when I started writing software when I was in high school in '68, and through the '70s, it was like all you want to do is get the darn thing to work, right? And you didn't worry about all this other stuff. And that's Y2K. The memory was small. They only used 2 digits for the year. I spent 6.6 million fixing Y2K for Spartan. When we when payment networks were not secure, I talked about how the original credit cards were designed and the chip and all that. They have become banks, financial institutions have become incredibly sensitive because of all the hacks that have occurred. So they have built security. I had an 8-person security team. And so we all have made huge investments to make these systems and the methods much more secure. That chip on your credit card is, I mean, it would take me another several hour lecture to explain to you how all that works, but it's all about security. Making a credit card the old way was just nothing. Everything was exposed. So I'm as a person from the inside, knowing what's going on. If they're reputable institutions, I'm very comfortable. And particularly banks, because banks they've had to deal with this. You know, the Home Depot break-in was a joke. Their IT department, they were notoriously bad with security. So when they lost the credit cards, that was like no shock to anybody. But the financial, sorry, I'm talking about things from behind the scenes. Anyhow, the financial institutions, the people that handle financials have always been very security conscious. And the security methods have become incredibly more robust. Again, we could talk for hours. So it's based on that I feel I'm very comfortable. And, oh, you do. The consumer pays for it. The consumer pays for it. You know, when I was at Spartan Stores, I had 8 people. So somewhere that was buried in a box of corn that you buy at Myers. They had a bigger staff with a bigger company. And so, yeah, we all as human beings, we're all pay for it as part of the commerce process. It's, I can't remember this anymore. I spoke on a security thing. Oh, when was this? It was probably 2006 or 7. And I was on the conference. One of the speakers she was the head of, was it Matt? No, it was Discover Card. And she was proud to announce that through minimization of hacks and security things, they only lost $200 million because of security. And so I had a staff of 250 people. She had 5,000 people. So anyhow, I mean, the financial institutions are paying real close attention. And so you don't hear about the break-ins that you heard before. And so no, I'm very confident, but they have to be reputable. It has to be Zelle. It has to be the Cash App. You know, if you ever come across something you're questioning, let me know. You know, ask me. I'll tell you because you know I can help. But I feel very comfortable. Yeah, Kim. Sure.
So Dave, sort of along those same lines, after I listened to your talk about the open banking initiative.
Yes.
And then the role, if I understand it correctly, that Plaid has been able to grab in that system.
Yes.
It seems like they're, if not the major, one of the major.
They're kind of the major. There are others in building those APIs.
Yeah. So that a lot of that flow goes through those types of organizations.
Yes.
In your mind, would that be, you know, in terms of a system design, a potential weak spot? Because a whole bunch of information from
Is flowing through their systems.
Yeah, both ways.
Oh, yeah.
And how do you stop that?
Go
How do you
ahead.
control that?
Well, so it's I mean, there's other call them choke points, risk points in the system, but you can't imagine the amount of work that goes in to make sure they're secure. I mean, it is a point of exposure, but I can tell you, I'm not worried. If you can get into a conversation, it won't be in our lives, but there's something called quantum computing. And that's creating a lot of headache in the market because those computers are so fast. A lot of our passwords and a lot of the tools that we use today to keep things private will become a problem for that in about 20 years. And so the security people are all working on new methods. That's why, smile to pay, because it's the shape of our face, or the biometrics is the technical term for it. Because in the future, we need stronger tools. Right now, we're good, but 20 years from now might be another story, and will be another story. And so that's why there's people working on, the research folks are working on that now.
On one of your slides, you used the term crowdfunding.
Oh, yes.
What is that?
So crowdfunding is, what's the thing that you hear about all the time? GoFundMe. It's like GoFundMe, and yeah, fundraising. But crowdfunding, the other thing is, I kind of casually mentioned it a few times, that people might say, well, I've got, $10,000 I want to invest, or $100,000, whatever it is, 5,000, 1,000. And I'm willing to give it to a lending company because they're going to give me 2% back, or some, so a conservative investment, and then they'll go lend it. So they collect money from others as opposed to big financial institutions. Some of these companies collect money from others that want to use it as an investment, and then they loan that money out. And so that's another form of crowdfunding. Or I think I had a thing in there about peer-to-peer or something like that.
Dave, we have a couple of questions from online.
Oh, sure.
Yes, Karen would like to know what happens if you want to withdraw cash from one of these FinTech companies that has your currency?
They will issue you a credit card. And so you can go, or a debit card, and you will go to an ATM and withdraw money.
Thank you. And Bix would like to know, are there any local businesses that have used crowdfunding?
That's a good question, Bix, but I don't know the answer to that.
Okay, any other questions while we wrap it up? So right on time here.
I think you got one more over here.
We got one more.
Did you? Oh.
With the technical aspects of our finances now, which is very different than it has been many years ago.
Correct.
Yesterday, the Fed chairman increased
the interest rate.
The interest rate 0.75%.
Correct.
Now they base that basically on the amount of money that's in the system, that's in the country.
Yeah.
Is it harder or easier for them now to quantify how much capital is in our country?
That's
less.
That's an excellent question. And I'm not an economist, and I don't know about their models, but I would suspect, knowing about the underlying technology, I would think they have a lot more metrics than they used to have in which they make their decisions. But I'm just a little guy, so how that big picture works, I don't know quite as well. You want to talk about computers and software and security and communications? I would assume they have much more data, but there's still a lot of data that they probably can't measure. But I suspect they have a better view into what's going on economically than they have in the past. And certainly they have computer systems that can process data much faster. That's like weather prediction, right? The reason weather predictions are getting better is because they collect more data points. Because the computer systems, and when I was working on my master's, I spent a bunch of time on supercomputers and so forth. The computers are getting so fast. In order to predict weather better, you need more data points. And so the faster the computer is, the faster you can analyze. And, in the data point, each one, they want a temperature, they want barometric pressure, whatever, humidity. There's like 3 or 4 metrics that they get for every point. And then they get millions and millions of points. And the more millions of points they can get, the better the weather prediction is. Well, it's the same thing. They have much more powerful computers that can collect a lot of data, and so they can do more in-depth analysis. But beyond that, I could not answer that question.
Okay, anything else? One more. Okay, got to make it quick. We're wrapping it up here.
With our election coming up Tuesday
Yes.
and a fiber issue on that ballot, do you have any opinions in terms of how essential it is that we continue to add those sources?
I certainly do. So what she's talking about is the Holland BPW's fiber initiative. And I've been to a couple meetings and seen the details of the plan. And I will also tell you that there's been negative opinions in the Sentinel. And what you don't know is those opinions are being written by people that are competitors. So that's coming from Comcast and AT&T and those folks, because they don't want it to happen because it creates competition. And the examples they use of other municipalities that have had issues is because what BPW has done, so two different ways to approach this. Build the infrastructure, so the stuff on the ground, the stuff on the poles that goes by your house. That is what the millage pays for, is the underlying infrastructure. And so we're saying, hey, this is a community service. And it's a well-designed system. I'm very familiar with the technology. I put my first fiber system in 87, 88, something like that. And so their design is very, very good, or at least to the level they've done it so far. But the point is financially, they're saying, let's pay via a tax for the fiber structure to handle the entire community. Then if you want to sign up, then they're going to run a cable down from either under the ground or from the pole to your house. That is a paid for service. So that's very smart, because what's happened in some of these other communities is they've done it all on a bet. The infrastructure, everything, the whole cost is all based on a participation rate. And so what happens is they do this, they don't get the participation rate they expected, and all that cost of that underlying infrastructure is riding on that. So they're not, if they don't get what they predicted as the participation rate, they're screwed. So Holland's been very smart, and BPW, that's a really well-run organization. And so they've said, we're gonna tax everybody for the infrastructure. Then then they're going to do it with bonds. And so eventually they'll pay off the bonds, the tax will go away, whatever. And they factored in the cost to upgrade, because there's will it get obsolete? So the fiber optics, I designed a fiber optic system for West Ottawa schools, and we put it in 1990. The glass that it runs on is still there. Now they've replaced the electronics several times because the electronics gets better and goes faster and so forth. So it doesn't go, but the fundamental fiber that's on the poles or in the ground, it's the same fiber. And so there's no fiber doesn't obsolete itself. Electronics do. And so they've designed all of this. So they put the fundamental infrastructure in, they put the electronics in, and they have enough funding to maintain it and keep the electronics current. Then everything else is based on customer participation. I think it's I think they picked, is Dave says, we've tried to take as much risk out of it as possible. And for those that want to stay with AT&T or Comcast, your rates will probably go down because they've got new competition in town. And competition is a good thing. Sure. Thank you.
That's a good question. Thank you, Dave, for all this. I will put in a plug for my Apple Watch. My credit card sits in a wallet deep down at the bottom of my purse. And so when I buy almost everything now, I can just tap for my card and just swipe it if they support it. I never have to dig in my purse. It also has Apple Wallet where you can have a boarding pass on it. I have left my phone at security at the airports before, did find it, but I don't like to have anything in my hands when I'm going through security. So I just scan it that way. So anyway, those are all great items. Thank you, Dave. I've been asked to make another announcement. Actually, the second announcement was missed on the recording for the folks online. The August monthly program will be hosted this coming Tuesday, August 2nd at the Jack Miller Center for Musical Arts. The presentation is Exploring Ottawa County Parks and presented by Jason Shamblin, Director of the Ottawa County Parks and Recreation Commission. Doors open at 9. The presentation starts at 9:30, and join us on the way to or from your voting obligation that we just talked about. And you can also join virtually via the live stream available on the HASP at Hope YouTube page, not the HASP virtual classroom. It's the YouTube page. So there's a big distinction on that. So anyway, I want to thank you all for participating and attending today, and I hope you have a great rest of the day.